cool. Let's get into it, DK.
Alrighty. All right, so today is Wednesday, August 9th. We're coming off of the strongest 10-year auction of the year. 2 years trading at 479, 10-year right at 4. The auction ended right at 399. We got BTC Devol at 40, up from 33 3 days ago. ETH Devol at 35, to give you some comparison to what it was last week or 2 weeks ago. It was at 39 and 37 respective. So even though we've had a little bit of movement in price action, that it's relatively unchanged on the vol levels. So today we have Chris and Turban Ether from GSR, and Chris, who is a free agent. And if you guys can go ahead and give a brief background on yourself, we can get into it.
Yeah, sure. So Simranjeet Singh, also known as Turban Ether, so you can call me Simran if you want, just to make it easier. Have a TradFi background, was on the commodities desk at Goldman for a few years, had a blast and thought that was a high vol asset, where 60, 70 vol felt high, and coming to crypto, that felt boring. So imagine how 20, 30 vols felt when BTC needs started realizing there. I've been with GSR for about a year and a half, and I lead our OTC and institutional sales effort in the Americas.
Yeah, and then a little bit of background about myself. I was previously at Genesis Trading, recently left GSR, but was previously on the OTC trading there, OTC trading team over there, trading spot and options. Currently working with CoinCall Exchange to help build out kind of like an options academy for them, and then working with a couple of other various DeFi protocols, Vertex and Panoptic as well. Staying involved in the space.
Nice. And I'm Marty, your in-house option nerd. We run a small boutique options fund focused on selling vol since the FTX crash. Before that, we were a spot and Delta One market maker on the FTX products across the board.
Now retired, and he's got a hat business.
We also run a unprofitable hat business. I hope everyone's wearing their hats today behind the screen.
I'm still waiting for a market-making turban, mate. That's what I'm waiting for.
Market makers love them turban. Imagine. One day I'll get that Riz, I don't have it yet.
You haven't sold enough vol. That's what that sounds like.
Yeah. Oh, let's get into it. DK, you want to give an intro, or we already know who you are?
I'm DK. I cover operations legal at Premia. I wear many hats, though. Yeah, I mean, I don't know where you want to start off. I know that we're still split in terms of continue to sell vol. Is there any sort of, is there some life going to get breathed into this market? I know I posted earlier this week that I stopped selling vol. The last positions that I have actually expire on the 11th. I'm kind of taking a seat back, but interested to see what you guys have been doing.
Sure. I don't know, just a little agenda. I want to steer away from as much macro as possible because next 2 weeks, next show, we have Alex Kruger on, and that's just going to be like a macro overload for my brain. So right now, I just want to cover institutional players, how they're playing this low vol regime, a little insight into institutional flows. You have the large ETH player. You have people nibbling long-dated Vega, and maybe we can get into a little bit what that means. Directional versus non-directional plays in low vol like this, good idea or bad idea. Outlook on DeFi options, growth or decline overall, what's new and coming into the space. And then we'll wrap it up with like a quick outlook on the total scope of the market, the ETF, spot versus futures, the Grayscale lawsuit, the implications of that, and what is happening in the Bitcoin space. I guess we can start with Chris. What are we looking at in terms of the bigger players in institutional? What are they doing right now? What are these bigger players doing? How are you looking at it?
Yeah. So there's been a lot of interesting kind of big block flows going through, and Simran can also expand a little bit more, being on the institutional side as well. Just from what I've kind of seen in the options space, it's pretty interesting, especially kind of seeing what's going on in the spot markets first. Like kind of just looking at the price action right now. Something to take note of is that pretty much every pop higher is kind of just sold off very, very quickly, right? Like when were the days? Like I think mid-July, we gapped up 32K. Immediately day after sold off, the same amount of percent pretty much as we had went up. A lot of this kind of like support and resistance and kind of the things that we're playing off of right now, honestly, in my eyes, it's very, very, very specifically event driven and very event focused as well. Mainly focusing on kind of like that spot ETF filing, any spot ETF approvals or subsequent kind of delays of that. That's where I think a lot of the interest on the institutional side is right now in terms of how to play that out. We're kind of seeing in the volatility markets as well just how that actually is going right now, right? Over the past, 6, 8 weeks, past couple of months, vol has literally just been down and to the right? The only like big pop that's kind of, sustained, but how much longer was the one from yesterday? And I'm sure we can all kind of talk about what's going on over there, but like it's a very Bitcoin driven move, right? We're kind of seeing what's going on in BVIV, EVIV, things along those lines. Yesterday, there was massive, just outright call buying on the front end of the curve, really propping BVIV up. It's like a very much so Bitcoin driven move. Everything from me kind of just points to Bitcoin as the asset that people are super interested in, mainly on the institutional side. I think they're kind of positioning or trying to position for these spot ETF kind of approvals or delays. Any sort of delays I think would be very interesting. And I mean, tomorrow from a, just quick macro tidbit, tomorrow CPI, of course. So that's something that people are kind of interested in as well. But yeah, from the institutional side, it's really what I'm seeing on the flow side. People are just positioning for any subsequent delays or an approval of this ETF. Simran can probably expand a little bit more as well.
Yeah, happy to. I mean, one of the key themes has really just been longer dated vol buying to the upside. You see people buying March, June, DEC March, June of 2024 calls, right? Like, for example, the 100,000 strike calls we're trading. One of my favorite expressions, at least in this current landscape with relatively muted vols, although we've seen them pick up, has really just been pitching things like call spreads and binaries, where, for example, you can get a 1 year out binary at on a 100K strike on BTC for 4.5%, 5%. And from a risk reward perspective, that seems great, right? If I'm risking, let's say, 45, 50K to make $1 million in a year versus holding BTC as a spot asset and making 70K if it trades at a 100K or higher in a year, like the risk reward seems worth it. And you see that kind of mentality of people deploying leverage, taking advantage of cheap implieds and realize, which are really at their ultimate historic lows in both implied and realize when you look, from 2019 onwards. So yeah, to echo what Chris was saying, the bullish sentiment still remains strong. The expression and narrative is really based around the spot ETF news, the recent approval of the leveraged futures ETF that got approved. I think it was 2x levered, and then also with Bitcoin halving on the horizon, which has generally tended to be a bullish catalyst. I think that the confluence of cheap vol, a lot of broader excitement, the potential carrot of institutional money flowing in, and the world's largest asset manager potentially getting approved for this. And you only have a 240-day time clock for when the SEC has to, at the end of the day, decide on this. And our research team recently put out a piece detailing what the different benchmarks are and what the different expiries are in terms of how long the SEC can take to make certain decisions. So I think there's a lot of broader bullish sentiment that's backed up by the flow. And then comparatively, I would say, on the ETH side, it's been a bit of a mixed bag. The overrider that was present in the market has kind of disappeared for now. It's unclear whether they'll return. I imagine, some of the moves we've seen over the past few weeks of having sold 300, 400K Vega into the market and then having to buy it back on the rally about, 8 or 10 vols higher, could not have been easy. So vol selling can certainly be painful if done in the wrong way. And I'm glad we have Marty to sell vol in the right way.
Well, we try, right? We're not like max short vol anymore, right? We're hitting all-time lows in vols, D-vol and E-vol. I know BVIV and EVIV are the talk of the town for my boy Cole, but data doesn't go that far back. Yeah, it was interesting seeing that the ETH player cover when the XRP news came out, right? He was caught totally off guard. And you have to think, this guy's been winning for a year and a half. And so he was totally caught off guard and he lost some money for sure. But it wasn't oh my God, he got totally blown out, right? He could have if it kept going up, but it was interesting. It was almost like he was caught with his pants down. And then if he would have held the position a week later or even till today, he would have been in profit, right? We had only seen it devol move like 34 to not even 40, I don't think, when that XRP news came out. And it's interesting that he does that on book, right? He does that on Deribit. He's not doing it through Paradigm or Greeks Live or OTC, right? He's all doing this on book, which I think is another topic if you guys have any insight about that. I mean, is he getting preferential fees on Deribit? Is that why he's doing it on book, or he's just that slow?
Yeah, I have no idea. Kind of seen that as well. I mean, that's been a trend that we've been seeing, this ETH overrider for quite some time. And something that I've kind of taken note is he's not doing it on Paradigm. Like, I'm pretty sure there's a tweet thread where a couple of weeks ago, or I don't remember, maybe a month or two ago, where they're like, okay, if this guy was doing it on Paradigm, he would have saved X, Y, and Z in fees. So it's really interesting to me to see that he's just executing straight on Deribit. That's something I've definitely taken away from it. I'm not really sure like what to think of that, honestly.
How anonymous
Yeah,
is Paradigm? So like, would it be a question of maybe they just have a different motive than just fees?
I mean, I imagine anonymity is one component. Although when I do talk to the folks over at Paradigm, they're one of the most like quietest, hush folks and respectable folks that I can imagine. So I'm inclined to believe in their confidentiality and not leaking, marginal flow and who's doing it. Yeah, that said, the execution mechanism does surprise me, just because like it's one thing to have your OIs pop up in overall aggregated reports. It's another thing to do it on Deribit, where the execution, I won't go so far as to say it's sloppy, but it's like you can save a fair bit in transaction costs. And obviously, when you're capturing, 10, 12, 15, 20 vol grinds down, maybe your biggest priority isn't necessarily the incremental bid offer you pay, but like there should certainly be a component. Yeah, I don't have the inside track per se. I don't know if it's preferential to rebates on Deribit or what it is, but it is a bit shocking and surprising all around, I think.
What if it's just a psyops just for us to talk about it, right? Like, what if it's something like this, like it's just a talk of the town, It's just super bizarre to me. I know Tony's in the crowd listening. He probably has the answer. He's not very vocal. One day we'll get him on the Marty show, but maybe not today. Yeah, it's been very interesting to watch that guy execute and try to cover insanely fast when that XRP news came out. Today seems a little boring, right? Even after yesterday. Yesterday, like I posted something like, oh, did something happen? Because like Bitcoin vol moved up and then ETH is kind of like nothing, right? Like front end picked up, but back end didn't do much, right? What did you guys see on the GSR decks the GSR deck yesterday? What did you guys see come in? A bunch of front dated stuff, or a bunch of just this outright long vol buying of call spreads and stuff like that?
I think the favorite expression like yesterday was a little bit of a mixed bag. I saw some spot stuff. More recently, I think there was more interest in even some like longer dated downside. It's a little bit of a mixed bag. I think the broader sentiment is still overall bullish. It's more of just like what will really get us to move, right? When you've gone so long without moving, it's like I expect positive spot vol correlation. So like it's not surprising that the front end would move when you rally $1,000 or sell off $1,000. But it's like in order for us to break through 40K, 50K, 60K, 90K, where a lot of these long dated strikes are, it's like I think most folks realize that because of like the 240-day extension period that the SEC has, it's like, sure, is there a likelihood that this could get approved within this calendar year? Sure, but is Gensler likely to do that and not push it off until early next year? Quite unclear. So I think like it's unsurprising that a lot of the flow would be around the front end. So like the marginal stuff that we saw, I think, was relatively shorter dated and within the calendar year, but a bit of a mixed bag, honestly.
Yeah, that's interesting. You're seeing like outright call buying of 100K, 90K strikes. I guess it goes back to say like, oh, you could risk 10 grand to make whatever it is, right? $1 million or whatever your example was, versus holding Bitcoin itself. And if vols pick up in the longer dated, they would make money too, right? Even though the strike is a little exuberant, a little crazy.
Yeah, I was giving the example of just like a regular binary option, which you can replicate using call spreads. But yeah, exactly, same exact principle. if you believe in the positive spot vol correlation on the back end, you buy some cheap back end vol right now, and just take it from there. But,
Yeah, that's interesting for sure. Yeah, outright call buying 100K. Yeah, no thanks. Oh, that's interesting. Yeah, yeah. God, like that guy needs a hat. Whoever that guy is, dude, ping me. I'll get you a hat. Okay. I mean, it might work out in the long run, but today, I'm not sure right now. It's interesting with this spot versus futures ETF, right? The futures ETF was approved, and I guess a lot of people don't even understand why a spot one has not been approved. Maybe we want to go into that a little bit. Like for me, a futures ETF was approved because a spot ETF can be manipulated more easily, right? And without clear, that's like a simple one liner, right? And without clear regulation or guidance from the US or the SEC, I don't see a spot ETF being approved. If anything, it gets pushed back. Like them allowing a spot ETF then allows everybody else following to just change their docs to match, and then everybody gets approved, and then it's like a spot ETF gold rush, and then the same thing, like you get this, probably you get a hype into it, vol rises into it, and then you get a crush on the back end unless the flows pick up and it really is, the change of the vol regime. But I don't see the US approving anything until they get their ducks in
I
a
got
row.
something to poke around with. So with the Fed's guidance yesterday, kind of announcing that sure you can do this type of activity if you get written consent before from the Fed for all of the the banks that are under their guidance or leadership. Is that setting the path, or does that pave the way for some of these groups, especially at the custodian level, to put together that documentation, get written approval, and then come January timeframe when the deadline hits, it's a little bit more clear cut if it'll get approved or not? What do you guys think?
I think that makes complete sense, because going exactly right off what you're talking about with the custody, I think one of the biggest reasons like the spot ETF approval and discussions around that were kind of like stalled previously was, all the reasons Marty had said, but also kind of like if you're trading the spot ETF, there's definitely some sort of like custody solution, being able to actually trade and take delivery of physical spot, and things along those lines that a futures ETF you don't really have to even think about. So that's definitely something that I think kind of stuck out to me there.
the one marginal thing I'd add is if it was just any willy-nilly asset manager applying for a Bitcoin spot ETF, that would be one thing. But BlackRock, being the renowned and prestigious institution that is, of the scale and scope that it has, and also the interrelations that it has with government and regulatory bodies, I feel wouldn't have done this and made this application if there weren't a sufficiently high probability that they thought this would get approved. And I suspect that a lot of the subsequent applications that happened for the spot ETF from other providers was more of just, a little bit of FOMO, and also just trying to cash in on the legitimacy that BlackRock provided. Yeah, like it doesn't surprise me that why we didn't have it before. But I do think there's a sufficiently high probability that it does get approved just because of who's doing it, and also just because of the max deadline that's applicable for the SEC to review this, which I think, as I mentioned earlier, was like 240 days. So at most, or like by the first half of next year, we should have a binary decision. So.
And that all coincides with the Bitcoin halving, the 2024 election, the spot ETF. Are we due for another Suzu super cycle? Are we due for the super cycle?
I mean, I personally wouldn't be surprised. I do think it's going to be BTC led, which kind of coincides well with what you and Chris were saying earlier. I think like alts themselves saw a brief sustained rally post the XRP news, but have been kind of relatively muted. But yeah, I wouldn't be surprised if the convergence of all of these things leads to at least the preamble of the next bull run. But yeah. But I'm personally a little bit hesitant to make pure directional bets. I like to do other relative value plays or kind of arbitrage kind of stuff. But yeah, just pure directional bets, I wouldn't be surprised. Does that mean that we get to 100K a year from now? I can tell you what the market implied probability is, but yeah, it's not here.
Yeah, yeah, that's tough. How are you looking at this, Tolga? How are you looking at spot futures ETFs? How are you looking at the super cycle? Or are you just nose down in the premium
Yeah,
in the premium
I'm pretty
hole?
nose down at the moment, but for me, we were talking about like the flows, and I've been sort of tracking flows and have noticed that we talk about like this constant vol selling that is, the right side of the trade currently. And I'm always curious if, there could be mechanical reasons that would jumpstart a rally versus fundamental ones. So like a lot of things that would happen in traditional finance where everyone's in a crowded trade, right? And essentially, it's not necessarily about how big the news is. It's just more about less the pin that like sort of pops, like the bubble per se. Um, so I'm curious to know. Like, I don't think this is the case, but I'm curious to know if selling vol has become like a crowded trade. Now, part of me thinks that's not the case, mainly because all flows and volumes, assets on exchanges, everything seems to be down and muted. So I think a lot of the lower vol regime from that standpoint, I was thinking that there could be somewhat more of a knee-jerk, spring-loaded reaction to some sort of news, but then that XRP news sort of kind of debunked that would even be the case. I was kind of looking for something a little bit bigger from that standpoint. So yeah, it sounds like everything from a catalyst view seems to be further dated, and sounds like all the positioning that you guys have been talking about sort of reflecting and confirming that as well.
Yeah.
I think
Go ahead.
that the selling, yeah, one sec. I think that the selling vol trade, I think Tony wrote about this like a month or two ago. It was like a very crowded trade, right? And maybe the crowded trade wasn't the right idea. I think that that was proven wrong. I think that it was the right idea. But now, I mean, everybody that I talk to, maybe I live in my own little micro bubble, is doing this same trade. They're short the short dated stuff, and then they're buying the cheapest long dated Vega that they possibly can, right? And maybe that's me living in my own bubble and posting my short vol memes, right? But I can't wait. Just so everybody knows, right? I can't wait for the vol regime to change and imagine the memes and the hats then, right? Like this is bull market or bear market, Marty. Imagine full on bull market. It's gonna get bad. It's gonna get bad. Who did
Just
I cut off?
imagine.
Did I cut off you or Chris?
Nah, I was just saying. I was
DK.
thinking of there was the decade long, like post global financial crisis going into COVID, was like the most crowded trade of being short vol on that carry trade, and then everyone getting rinsed in, and then the COVID downturn. I kind of reminds me of that. Is that like everyone was in that short vol trade, and then everyone got rinsed. But
It's like imagine the hats that Marty will sell when we actually go into like 70, 80 vol regimes, right?
Yeah, not even sell, right? We'll give them away, right? So that's what we did. We gave them all away, and then the ones that we did sell, I'm gonna go work on the 18th and 19th at the local charity and give them the money. It's around like 3,000 US, so that's a lot of Brazilian salaries. I'm not doxing the location until after. Okay.
That's fair. That's fair. The one thing I am curious about is that, like, let's say BTC doubles from here in like 6 months, right? Do we think we're going to be in the 60 wall? Like, for me, I feel like there is definitely a fundamental dislocation in how folks are now beginning to think about the BTC and ETH narrative, right? Typically, you had majors move in parallel, and alts were just a high beta move compared to that. But like BTC is now, what do you think of the de-dollarization trend when you think about a flight to safety, when you think about, dare I say, boomer digital gold? It's like BTC is that relative store of value, where ETH feels more like a tech stock, more like a Tesla, more like a Nvidia or something along those lines. And so it's like, do you foresee, do you think we'll have sustained high vols for, I guess, both of the majors or either of the majors if we, let's say, double from here in the next 6 months, right? Obviously, like some of it's path dependent, so like you'll see vol pick up to some extent. That's why I do believe in the positive spot vol correlation. But I don't know if we'll ever see BTC get to sustained periods of like 100 vols uh, that we did like before during the last bull run. That's kind of more of what I'm thinking. But curious to get your thoughts on it.
I would think that so. going back to just this lack of institutional capital, or this declining institutional capital, I don't have any direct numbers. There's just general numbers that kind of indirectly kind of confirm that. My opinion of that is that retail flow is more knee-jerk reaction, quick to make a buck. And so getting them back into the space will happen much faster than institutional capital will integrate and start providing liquidity. I think retail just moves at a much quicker pace, on and off, right? Like they'll turn on and off way faster than institutional capital does. Institutional capital kind of lags that process. And so because of that, you're going to see essentially like a liquidity crunch, and to the upside, right? That would be the general idea. And so I think you can see a considerable amount of vol pickup, mainly because you would be catching institutions off guard. They essentially see the retail come in, institutions come back in, and the whole cycle repeats itself. Because I think we're now at the point at which retail has left. They've been gone for quite a while. Institutions have been hanging around, but now they're all starting to fall off. And so assuming that cycle starts, or we get to those higher numbers from retail flow, I would assume vol will be sustainable for a period of time, at least a few months.
Yeah, from my perspective as well, just kind of thinking about that, I'm actually going to take the opinion that it probably wouldn't be sustained for too long at these 90, 100 vol levels that we saw in the last bull market, just because of kind of how the institutional pipelines and rails have kind of built out for these derivatives now. I know there are several TradFi players who have very big balance sheets who are interested in crypto options and derivatives that have entered the space and are now willing to kind of make these markets. So just knowing like off the bat that a lot of institutional market makers are there and ready to quote markets on this stuff. I feel like we've kind of, made strides and progress over the past 2 or 3 years in terms of the liquidity providers who are out there actually quoting these options. I mean, 3 or 4 years ago, we didn't have the institutional capital, and that also kind of didn't really, bring in a lot of the market makers. Now we have all these institutions on the sidelines ready to kind of get involved in the Bitcoin and ETH options markets, as we can kind of see, from the growth on the CME, from what's going on Deribit, things along those lines. Then now there are these big TradFi market makers who are starting to open up these crypto options desks, opening up kind of these like OTC and bilateral trading, desks as well. That I think that there's going to be a lot more ability for the markets to digest the kind of size and volumes that might go through if we were to see a massive rally like that.
So you would say like there's essentially more infrastructure building, not necessarily a lot of trading going on, right? So like from a capital standpoint,
Yes.
They're not present, but the back end building is still ongoing, and they're building out their infrastructure even more so than they had before.
Yep.
Yeah.
Yep.
Yeah.
Yeah, no, I'm inclined to agree with that. I do agree that retail moves, orders of magnitude faster. But that said, building on Chris's point, I think there's been a lot of building done from the TradFi institutional side, which is also, kind of interesting to think about what this will mean in terms of what the ethos of crypto will really be. When you had a lot of crypto native firms that were first movers, that were trying to build and scale with the space, but then when you have traditional market makers like DRW, like Citadel, and your other HFT kind of shops that are moving into the space and also expanding on the options wall side for crypto. It's like they've been building for a while. Whether there's been significant institutional capital flowing in or not, that's a different question. But I think when the appetite is there, I suspect the market will be able to absorb, to Chris's point, a lot more than it did back in 2020. Which is also why I think like the front end of the curve probably, again, I expect to see backwardation with retail flow pick up if we do rip from here, but probably won't sustain for, significant periods of time. And for being significant, I mean, everyone has a different definition of significant. I'm talking about like for a year, right? I doubt we're going to see significant backwardation in the long-term structure for a year if we double from here in like 6 months.
What would you guys think? You know how, for instance, in DeFi, you can look at alternative metrics to kind of gauge back-end health, right? So you can look at the amount of VC capital being flowing through the system. You can see the amount of commits that are being made across projects in different sectors. Would you say there's anything that you guys would look at or monitor to kind of validate that idea that, okay, people are building, right, from the institutional side? Because that's a little bit more closed-ended and it's not as publicly viewable. Do you guys have any thoughts in terms of the things you guys are looking at, or just in general, where you guys would kind of come to that conclusion that that building is happening?
On the institution side, I think it's a hard thing to get a pure quantifiable metric unless you're just looking at pure headcount and hires and saying, hey, this firm tend to expanded their digital assets team and they 3x in the span of like 2 months. That's one low-hanging easy metric. But besides that, I think it really just comes from talking to folks in the market. And I still talk to folks in traditional assets just because I don't think crypto should live in an isolation or a pool in and of itself. And I think there's a lot of things to learn from traditional finance or traditional risk management, at least, which, as we learned in 2022, right, credit risk, counterparty risk didn't seem to be a thing in crypto, and then all of a sudden it became the only thing that mattered. And so, yeah, without actually talking to folks in those institutions that are building, I think it's hard to come up with a pure, objective, publicly available quantitative metric. So yeah, a bit of an unfair answer, but that's kind of the only thing I can come up with at the moment.
Yeah, I got something there, right? Like what I've seen in terms of tools that are being built, I don't think that there's like a metric that you can put on it, right? But in terms of people that are leaving TradFi to join crypto and the amount of tools that are being built to cater to pro-tail or institutional players, I don't know, Architect or Kemper, what I had a call with, I guess it was Kemper, it is very interesting, right? And it's picking up. I don't know if this is like people want to sell the shovel, right? I'm not sure if we're there yet, right? They're waiting for this gold rush. But yeah, don't think that there's a metric, but it is interesting to see all these tools and people moving space, maybe because they pay more. I have no idea, right?
I mean, you also saw EDX Markets, right, which is backed by your heavy hitters in traditional finance, like, and it's just I mean, currently it's a little bit more gated, and I know they're building their clearinghouse, but yeah, when you see public announcements along those lines, where it's like, hey, this is backed by the Citadels of the world, the Sequoias of the world, the Goldmans of the world, X, Y, and Z. It's like, yeah, people have clearly been building the crypto infrastructure, and so they're preparing for what I would anticipate is the next super cycle. Yeah.
Yeah, and like the banks aren't going to sell a product unless that they can make money, right? So maybe they were too slow and couldn't make any money, or there was no product for them to sell. But like once you get a spot ETF, imagine all of the banks now are selling this to retail or to whatever institutional clients or to private offices, right? The flows would be insane, right? We have this in Brazil, like you can buy crypto on your banking app, and that's picking up. Tether's a huge thing here. It's all stemming from these banks are now able to sell a product to somebody to make money. And I just don't think that the US is there quite yet. They're right on the cusp, right? And imagine being EDX Markets, right? That's like the biggest players are joining the crypto space. Everybody institutional will probably trade there or will start to trade there. Or maybe that's the only place that they can trade, right? Because it's the US, right? You can't get on Deribit. You can't get on any other perp or options exchange. You have CME and then the EDX guys.
Yep, agreed. And also, if the whole spot ETF thing goes through, I mean, I expect options volumes on that will explode on the CME. And I do expect like volume migration on more of an aggregate basis to shift towards CME, just as you have the flood of institutional interest pick up. Just because, like, if Deribit goes down, I mean, like, would it be cataclysmic? Of course. But, if CME goes down, then it's like the whole world's on fire and there's bigger fish to fry.
Yeah, that's super. Yeah, I mean, yeah, if Deribit goes down, then that's just like another FTX crypto only black swan event, right? All the main news outlets will say crypto's a scam, and that would be it, right? It would just be another news cycle. But if the CME goes down, yeah, for sure, the world's slowly collapsing. Especially the U.S. financial markets are slowly dwindling.
Plus, I like getting paid interest on my collateral if I'm posting to the CME as opposed to having to post it on Deribit as well, just from a capital efficiency perspective.
Yeah, and you have counterparty risk and all this stuff, right? Just depends on. It's interesting. Deribit's doing the Fireblocks integration, right? So you're not going to get interest, but you wouldn't have to keep all your collateral on Deribit, you could lock it in fire blocks. But there is a backdoor that if you do get liquidated, or if they start to liquidate you, that Deribit has a backdoor into your funds. I'm not sure how that works. I have a call set up next week for that.
Definitely curious to learn more there, but yeah.
Yeah, I'll send you what I get. Yeah, it's pretty interesting. What's the outlook on DeFi options, right? Premia is a DeFi options protocol, but I'm still in the boat that nobody has built the perfect options DEX. I know that some of the things might not be possible due to current blockchain constraints. Maybe Tolga can jump in there a little bit more. But what are you guys thinking here? If retail comes back, flows go up. Is my simple one-liner.
I would say, like, from a tech stack standpoint, trying to predict exactly where things will go is probably no different than trying to predict where BTC is going to go, right? Like, we all have our guesses. We can sort of make some assumptions. We sort of took the approach that we don't 100% know what catalyst and what type of tech stack will advance faster and quicker, or what elements we could use within our ecosystem. So obviously, I assume most people here are pretty native to like order book structures, and order books have like their own complications on chain. But we did implement an order book channel, I guess you could say, in terms of a tech stack that we're working on and developing. Then we also have like our AMM side, which is basically the concentrated liquidity, equivalent to, say a Uni V3, but for options. And where that will evolve to, if LPing becomes a standard, or if AMMs are going to converge to an order book style, we're not 100% sure, right? But we do have that infrastructure in place for that. And then, of course, I think there's always going to be a place for vaults. Vaults are probably akin to, ETFs, right, and structured products, and I think there's always a place for those. So I don't necessarily think that's ever really going to go away or be drastically changed from a tech stack standpoint. So right now we're just kind of looking at both models of the order book and the AMM, and at some point, capital efficiency is going to be the main theme, right? Putting orders more aggressively from a quoting standpoint, being capital efficient from a margin standpoint, from a collateral view. Those are extremely important things that we sort of have as top priority items on our list, in which we're sort of progressing through. Margin in particular, I think it's pretty standardized in DeFi at this point to have sort of a Reg T margin design, right? Like sort of like an isolated margin for a specific position. Portfolio margin is sort of this like holy grail of capital efficiency with options that is, it's quite challenging, because portfolio margin requires a lot of moving parts, a lot of elements that have to sort of come together as a ecosystem, and then also complying with sort of the DeFi ethos makes this, a little bit more complicated. So I think that becomes one of the major frontiers of evolution. Like, portfolio margin will bring on the vol trader, right? And I think right now, being a pure vol trader is very difficult in DeFi. It's just there's too much friction to kind of have pure vol exposure, or express your exposure in vol terms through options. And so I think once portfolio margin comes, that'll sort of bring on a whole new user base.
Yeah, I strongly agree with everything you said. I think the lack of portfolio margining, and I think the capital inefficiencies that currently exist, just make it very punitive and challenging to really do anything, let alone do it in size when it comes to DeFi options. Like, you have awesome protocols out there, but I think there's just too much fragmented liquidity, and even the actual latency required to put up, like from a market maker perspective, to put up an order, recall it back, and then back again. Like the co-location problem, the actual latency problem, the actual cost of everything, I think is just too sufficiently high. And then having the lack of a portfolio margining system just makes it all the more expensive to do.
I don't know. Is it more expensive? My AWS bill is really high. Like if you did all that, plus you have The on-chain stuff just depends on where you are, right? If you're on Arbitrum or if you're on ETH. If you're on ETH, of course, right? I remember one time I spent $900 on a failed NFT mint, and that was my first and last NFT ever. Yeah, never again did I ever try to get an NFT ever again. Yeah, it's just not there quite yet, right? And even crypto in terms of latency isn't there quite yet, right? We're still in like milliseconds where TradFi is in nanoseconds. So like what does it take for crypto to move that fast? And do we want to see crypto move that fast, right? And who's capable of doing it that fast? The people with the most money, right? Some dude in his basement's not gonna rack a server and be in the nanoseconds, right?
High frequency trading starts to have some marginal utility though, right? And so it starts to become phantom liquidity. And you see that a lot in traditional finance too, right? Markets appear deep until they're not. And that becomes a major issue. And I think it would just be exacerbated in crypto, just given, the restricted float dynamics versus the capital flows that come through and that would need that liquidity. So I'm not in the band camp that catering to high frequency trading is necessarily healthy for the crypto market, just given that I think it exacerbates the tails, and we already have sort of a long tail system ecosystem currently. So I'm not sure why we would want to maybe add more to that, from just a bigger picture, obviously. I think that can create a little bit more complications than we'd like. A few more black eyes in history of, funds exploding and, large spectacular blow-ups from someone somewhere that would just essentially, cause just another cycle to have to, take more time to build and develop.
Yeah, it's interesting, right? It's going to be interesting next few years in crypto, right? Like I used to be like a Bitcoin maxi, like when I started, I think most of us are. And over time, it just became like a money maxi, but I'm not rotating all profits back into long-term Bitcoin holdings for Bitcoin is the future of the world, right? Like if you've read the Bitcoin Standard book, right? Like I don't think that the banks are going to move Bitcoin to settle balance sheets at the end of the day. I don't know. Maybe I'll be totally wrong on that note. I'm not in the sailor maxi camp anymore, right? We're here to make money, and we have to return USD to investors every quarter or whenever they redeem, right? You can't. Oh, hey, I got some Bitcoin. They're like, what the fuck is that? Like Bitcoin was 90 grand or 70 grand, and now it's 30 grand. Like they don't accept that, right? Or at least ours. They only accept the whole United States dollar, right? So it's going to be a few interesting years, especially with DeFi options, right? DeFi options are still this new thing. Options in the vol space in crypto is totally new, right? And all the smartest people from TradFi or some smart people from TradFi are moving over. Again, I don't know if the bonus is bigger or if the money pays, or if they're really moved over because they believe in the tech space. I guess it's for you guys. Sinram and Tolga, why did you guys move over to the crypto space from the TradFi space?
Happy to go first. I mean, for me, like the value proposition seemed kind of straightforward. I was 25, didn't have a wife and kid to really worry about. And for me, I dabbled in Bitcoin back in 2013 or so, played around with it for a few years and made enough money to, fly myself to my brother's wedding in India and give him a good honeymoon, but hadn't really come back to crypto until maybe like 2018, 2019, started looking into Ethereum, started sneaking some stuff on the side. And for me, I kind of think that one of the eye-opening moments was when I read the Uniswap white paper. And although clubs tend to be far more capital efficient, it's like, oh, this is just such an elegant implementation of a very, straightforward mathematical function that how can I not be enamored by it? And so the nerdy side of me got excited, and then I started looking under the hood and appreciating more and more of the tech. And not having come from that background, for me, it was a whole new world to explore. The ability to combine finance and tech and help change the world in a slightly better way seemed like a obvious value proposition. And for me, it was just a very good call option. Worst case scenario, if somehow the entire crypto market had disappeared, I felt I had other options I could have gone to. But if I actually believed in it, which I do, which is why I'm still here, if it takes 5 years, 10 years, however long it takes, if we're actually able to be part of a movement that can make such a significant impact on how the world engages with technology, how we're able to actually transact, how we're able to democratize things that previously weren't, and kind of extract value from that. It kind of feels like a no-brainer.
But are you a crypto maxi or are you a Bitcoin maxi, right? Because I'm not a Bitcoin maxi any longer. I'm a crypto maxi.
I'm 100% a crypto maxi. I think, my view is if I look at which is more likely to double in the next year and a half, the first thing to double, probably Bitcoin between the two. But if I think what's the first to 10x between the majors, I'd probably say ETH. And like I've gone back and forth with some colleagues who are Bitcoin maxis, and we have some interesting and always pleasant but slightly interesting discussions and debates around it. But definitely a crypto maxi. I think the amount of value to be unlocked in the broader ecosystem is far greater than can be encapsulated by 21 million Bitcoin.
Yeah, I'm a crypto maxi, okay? I'm not a Bitcoin maxi, I'm a crypto maxi.
100%.
I mean, I couldn't say it better myself. You guys are like hitting the nail on the head. The only difference is my path to this was really planted before I even got into crypto. So I'm going to date myself a little bit here. I graduated college in 2007.
I wasn't even born yet, bro. I was still like being conceived.
So for me, my biggest like splash of cold water was going through the financial crisis, right? And so, I'm very young, I'm very impressionable, but at that time I also have a good head on my shoulders, right? I can digest and understand things at high levels, right? And so that age is you can take on a lot of influence at that age, right? When you're growing up. And so for me, that was going through the financial crisis and really understanding it at a low level and understanding the mechanics of what went wrong. It just became a no-brainer once, Bitcoin had come out. And, I remember reading the white paper. And it was sort of, that call option idea, like, wow, this would be amazing, but it just seems so theoretical, right, at the time. I'm like, this is what we need, but how do you go from 0 to 1, right? So that there was always that mindset. And then 2017 started, bringing on a little bit more realization. People have been getting, started to get more creative with it and ideas. And then so you get that, like, the equivalent of like the .com, hype cycle, where it's this promise of the internet of all the things it can do for us. And it all kind of came true, right? And everything that people wanted to kind of create or they envisioned in 2000, to some degree has been materialized to this date, right? Obviously there's people jumped the gun a little bit and then it took a little bit longer for that stuff to develop. But nowadays, I think we can't live without the internet, right? We are literally attached to it every day in, day out. Everything we do, especially in my life at least, is, I don't know what I would do without internet or cell service, right? And e-commerce. And so I think there's going to be that same progression with crypto. And it just seems too natural for it not to be. And then the question is just, how is it going to look, right? Like, who's going to do what? And what's the path of growth? It's going to be interesting to see.
Yeah, it's and Chris, are you a crypto at heart, or are you a crypto nerd at heart, or are you a TradFi turned crypto guy?
No, I've always been crypto, man. My first internship was Genesis, and my first full time was GSR. I'm always been in crypto, and I'm fully bullish on crypto.
Yeah, it's an interesting. Fuck, the guy for the AC just came, so sorry if there's a little noise. But yeah, fuck, my wife's dealing with it. Gotta get a new door for this fucking office. It's like one of those slated ones. Actually, my new office is the fucking maid's room, so there's like no privacy or anything. It's super weird, but we're working on that. Yeah, I'm a crypto native, right? Like I have no TradFi background. I got an internship at a fund in California, and then I essentially split off, took investors, not took, but added the old investors into the new fund. We started doing spot market making. And before that, I was into crypto. My friends were buying, illegal contraband with it, and it was always fun and interesting. But I didn't have enough money to buy like 1,000 Bitcoin, right? So, I have one Bitcoin. Well, Bitcoin was like $100. So, like, what could I do with one Bitcoin at that time? Now we pivot to this. It's worked out, and we pivot to this short vol regime, selling vol, riding the wave all the way down. I feel like might turn into like Michael Burry guy, like just like short all the time, right? And then be on Twitter talking shit all day, short all the time. So I think it's time to pivot. We have some interesting prospects in market making, some of the new EVIV and BVIV tokens. I hear that's going to come out on Bitfinex, so you can trade vol directionally, which will be interesting. See if retail picks that up. I just want to go back to being max long options, long spot, and hedging out that exposure instead of being max short on our whole book. It's a little weird and iffy at this time. And we're not that big, right? We're still sub 20 million, right around there, that 20 million range. So it's going to be an interesting year for sure with all that's coming up. DK, do we have any more time, or are we wrapping up?
I say we wrap it up because I gotta jump. Let's respect everyone's time.
Okay. All right, guys. Well, we had a little mishaps in the beginning. I thank everybody for coming on. I appreciate the insights. Let's not stay max vol all day, every day. Let's get some long exposure going and ride the next wave up together.
Yes, sir.
Awesome. Thank you, Marty.
Thanks for your time.
Thanks,
Thank
Marty.
you guys for coming on.
Chris,
Cheers,
appreciate it. We'll see you all back in
Later,
2
pimps.
Wednesdays.
Later,
Have
pimps.
a good one, guys. See you.